Hey, it's Rob. Welcome to Everyday Investor, the hottest investment show in the world. That's right. I said it. I don't care who knows it. Remember, whenever you're offered any type of investment opportunity, you always want to ask 4 questions to start. Number 1, what is the return on my investment if I get involved? Number 2, when do I get that return along with the investment amount that I put in? If somebody tells you it's a 20% return on investment, but it's going to take 4 years, then really it's 5% annualized. So you want to be able to ask the question, when do I get that? When do I get to see the moolah, if you will? 3, what is the minimum investment amount needed for me to get into this deal? And 4, you look them right in their eyes and you ask them, what is the risk, the worst case scenario, the downside if something were to go wrong? Everyday Investor TV show is designed to help you grow your money, mostly passively. But it's to help you grow your money. We take our precious time, we go to work, we make money in order to provide. So we take our time, we work, we get money so that we can eat. Imagine a life where money could make you money, so you could work a little less, have more time for the things that matter most, family, friends, a purpose greater than yourself. You don't want to go anywhere. We've got a phenomenal show talking to a friend from way out west, and we're going to learn how to make money investing in super suites. You don't know what that is? I don't know either, but we'll find out. Everyday Investor continues in a moment. Hey, it's Rob. Welcome back to Everyday Investor. I'm talking to Derek Peever. He's got a lot of properties, and he niches out in one of his niches in something called the super suite. Derek, thanks so much for tuning in all the way from BC. I appreciate that.
Thank you for having me. I really appreciate it. Glad to be here.
Yeah, where are you? I mean, I lived in Vancouver for a while. I lived in Victoria. I lived in Coquitlam. Where are you located in BC?
I'm in Pitt Meadows, so just outside of Vancouver. You would know it very well, Tri-Cities.
Yeah.
I've lived all over the Fraser Valley, but currently in Pitt Meadows.
In Pitt Meadows. And you've been investing in real estate for quite a while, but you kind of got into it by mistake, I'm told. Briefly tell us that story of how you bought one property and then someone knocked on your door to buy the next one and the next one in that famous building. And where was it? And, give me a few minutes, give our viewers a few minutes of how you even got involved and how long ago that was.
Absolutely. So December 2005, I was fortunate to ride in a vehicle with a lady named Kelly Fry, who didn't know me from a hole in the wall, but told me about a book called Rich Dad Poor Dad. And I went out and picked it up the next day and had the paradigm shift and, read that series, continued on, started going to meetups, tuning into podcasts, things like that. And we bought our first property pretty shortly after March 2006 in Agassiz, BC. So a tiny town, just at the very outskirts of the Fraser Valley. We were basically told we had to go that far to find something that would cash flow, which was fundamental to us. So we started super small with a $65,000 2-bedroom condo and fully renovated it, raised the rent. And as we were renovating the suite, like you mentioned, we had somebody knock on our door and say, we see what you guys are doing, and we have one up here on the 3rd floor for $52,000. So we couldn't turn that deal down. We moved our tools up there, and we did a deal 4 ways, $5,000 each, 25% down, and funded a small little paint and brushed nickel conversion renovation.
Very cool, very cool. And so you said something interesting. Somebody told you, I guess you joined some sort of network, and they told you that you needed to go out a certain distance to cash flow. So for those that, we try to really simplify the show and help out even, high school senior students. What do you mean by that? Why did you have to go that far out to cash flow? Can you explain a little bit of that?
Yes. So when you're starting, you're not that confident on what rents you may be able to get, and you don't push that envelope too far. So when we talked to the realtors and looked at the realtor MLS sheet and did our analysis, with 25% down, we wanted the rent to cover the condo fees, the strata, sort of the same thing. You guys call them condo fees out there. We call them strata fees, taxes, and the mortgage. So that's what I mean. Basically, the income from the tenant had to cover all of our expenses in order for it to meet our criteria.
And so you wanted obviously a lower purchase price, and so then therefore there's some more money left over that you call cash flow that can come in, and you can put that back into other properties. You can, take it and go to Turks and Caicos if you like. You can do whatever you want. So this is about 15 years ago. Where is Derek Peever today? What are you doing? What's the name of your organization? Tell me about that picture behind you. Where are you today, 15 years later?
Well, 15 years later, plugging away, we tried various strategies along the way, mostly in the beginning, renovate to hold. We tried wholesaling, we tried lease to own, and then we really landed on furnished rentals. We had a lady from Alberta come out and speak at a meetup group here in BC about furnished and equipped rentals to oil and gas executives. So we tried that in 2007 in Abbotsford, BC, and we never did another unfurnished rental ever since.
Wow.
Since then, we've learned about seniors housing. So we became involved in the project behind me in around 2013. I did a big research project on seniors housing before I even did a deal in seniors housing, and I presented it to the Real Estate Investment Network. So I got to interview people like the vice president of Chartwell REIT, which is the biggest seniors housing REIT, and I learned a lot. So nowadays, my main strategy, my bread and butter is super suites. We're in 17 cities, 4 provinces, 36 different condo corporations.
Wow.
So that keeps me busy. But also with seniors housing, which a bit of a hybrid in the building behind me, a mix of active independent living or resort style rentals mixed with our furnished corporate housing. So it's very unique.
Very cool. So define super suite. Is that all? I mean, is that synonymous? Furnished high-end rentals with super suite? Is that the same thing?
What's interesting is when I attended the meetups early on, I would see the term super suites in little case studies and things, like typically places like Fort McMurray in Alberta, where it's a lot of transient, like furnished type housing. So at a certain point, we were using the term in our ads and stuff. And at a certain point, we thought, let's check and see if this is a patented term. And it wasn't. So we patented an existing term in the marketplace. And a super suite is a fully furnished and equipped condo or townhouse that basically comes move-in ready. We target to helping people that have had flood or fire in their home. They need temporary accommodations for minimum 1 month up to 18 months if they're rebuilding their home. We also do corporate relocation. So many companies will cover a new doctor or a new employee while they sell their home back in another province, move to the area. And then in-betweeners. So let's say someone sold a home, their completion dates don't line up, they need that bridge for a month or two. We'll do minimum 1 month and then 14 days notice to end after that.
So obviously there's some manpower involved. There's a lot more administration involved. Some of your furnished rentals, though, do you treat them long term, like a 1, 2, 3 year lease, and it's furnished?
We do the odd one that's that long. Like in the case where someone's home is a complete loss, they could stay that long if they have good living allowance from their insurance company. But more typically, if it goes that long, it would be like a crew change every 4 or 6 months. With the company keeping the suite, but the actual resident changing at some point.
Okay. No, but really what I was getting at is, I have a buddy, Pat, and he has 17, 18 small, very small, 400 or 500 square foot condos in downtown Toronto, and they're all furnished. And so I asked him one time, and long term, like tenants, they're that small, so they're single professionals that live there. But I asked him, what's the difference between furnished and non-furnished in terms of income? Because it only costs them, less than 10 grand at IKEA to furnish that, right? $10,000. But it was pretty significant, the difference, than if it wasn't furnished. I mean, he was talking, he could get $1,800, $1,900 a month for this little studio, but if he furnished it, he could get close to $3,000. And I was like, that doesn't make sense to me. I mean, touch a little bit on the wisdom of furnishing, the suites and how much more money you can get and why. What's the psychology from the guy that's paying all that money?
Great question. So I give a presentation called How to Profit from Furnished Rentals to meetup groups. And there's a spectrum of furnished rental models, right? It could be anything from student housing to blue collar housing to targeting people that are separating, divorced, or the very highest end would be that minimum 1 month rental to the insurance company or corporate, where you can charge the big bucks. And really what they're paying for is convenience, right? So it's the turnkey utility package, it's the biweekly housekeeping, it's the all-inclusive ease of one easy payment, flexible lease terms. So like we'll allow the 14-day or 7-day notice after a month. But there's definitely something to be said for what your friend Pat's doing, is that if you take a longer term at a little bit less rate, your net could be just as good as suffering, 2-3 weeks vacancy in between 1 month tenancies. So that's the whole game.
Yeah, no, very, very smart, very clever, especially in today's day and age. I mean, I'm a minimalist by nature and declutter freak, and I love to walk into places where it's done. I don't want to think about this, and that. And then if you throw in cleaning and all that kind of stuff, it's kind of like I'm in my own little resort, and I don't mind paying more money. For example, I'm with Rogers, but everything's with Rogers because I don't want the headache of paying more than one bill. So I might pay a lot more. Actually, I pay less because of the bundle. But I don't mind even paying more money if it's a lot easier for my brain, as opposed to, I guess it's somebody like going shopping, right? You have all these coupons and I've got to go to 5 different places, as opposed to just going to one place and buying it all. I might pay a premium, but I only went to one place to come back. And, it's the same kind of mindset. I'm seeing a lot more people that really want the furnished rentals. And at first I was surprised. I didn't know that there was such a demand. My mom, she lived with us and felt really bored. She wanted to be in a retirement home. So she's in a retirement home with 120 other friends, and everything's all done. In fact, they come in daily to clean, her place and stuff. So, no, Derek, very interesting. Let's break down some numbers. You're going to go through one live case study for us, and we're going to see how we can make money doing that. That'll be great. Thank you so much for being here. Grateful for somebody like you with your expertise to nurture the viewers and those that are listening via podcast. You are watching or listening to Everyday Investor. Derek Peevers on the show, and he's teaching us how we can make money investing in super suites. Don't go anywhere. Everyday Investor continues in a moment. Hey, it's Rav. Welcome back to Everyday Investor. I'm talking to Derek, and he is teaching us how we can make money investing in super suites. Another word for that is furnished suites, shorter term, but turnkey for the person that wants to stay. You may be an executive, corporation. You may be in town for a period of time. You may be renovating your own house and need a place to live in for a few months. This is the product that Derek is teaching us how we can make money investing in. Derek, thanks so much for helping us out. I really appreciate that. Yeah, so give us an example. Like we say, you've done many projects, and a lot of them, may fall under certain qualifications and regulations, but people can reach out to you, and, you can help qualify them. I understand you do a lot of equity deals where people get to split the profits 50-50. Listen, the biggest companies in the world use partners. Apple probably has the most partners of anybody, because to do bigger and bigger projects, you want to have more people involved, and if everybody can win, then that's great. So I'm going to tell people to reach out to you if they have more questions in this concept, but take us through some numbers here on one project. How long ago did we do this one?
Sure, absolutely. So this is kind of my crown jewel deal I want to share with you guys. It's a bit of a bigger deal for me, so stretching my comfort zone. I've typically done 1, 2, maybe by 4, 6 at a time. This project, because of my relationship with the developer, we had followed them multiple projects over the years, buying, a few and then a few in the next one, and then building that relationship. She offered me an opportunity to partner with an investor group and herself to buy a block of units in this new high-rise in Abbotsford.
Okay.
It's the tallest building in the city by 10 stories, so I like to say it's our Empire State Building of Abbotsford. Tallest in BC outside of the Metro Van area. And we bought the 5th to the 10th floor. So it's actually 6 floors, 46 residential units. and one commercial unit on the main floor, which we call the Platinum Lounge.
Nice.
That's a space for our clients to use exclusively. There's also resort style amenities at the building. There's 3 floors of complimentary commercial, like a bistro, doctors, pharmacy, these kind of conveniences. We're right by the new hospital, fairly new hospital in Abbotsford.
Yeah.
And we're right on the jewel of the city, the Mill Lake Park. So there's a whole boardwalk that goes around the lake at the center of the city. So great location. And what we did is we applied Super Suites, our main business, as a hybrid with what we call Mahogany Platinum, and it's resort style living for seniors. So there's very many similarities, such as the biweekly housekeeping, the turnkey utility package. The Super Suites obviously come fully furnished and equipped. The senior suites do not. They're more like 1-3-year leases, that kind of thing. And they come with aging in place renovations, aging in place technologies, and also access to our director of client experience, aka the concierge, who in the Platinum Lounge business hours. So just a very high level of service. And then we also did a few regular market rentals just to ease the inventory as we bring it on board.
Yeah.
It's a unique project where the seniors don't feel like they're being put out to pasture. They're in more of a lively environment with kids and families coming and going. And the Super Suites has been great because it's really helped us be able to take group bookings and things like that. For example, if we have an insurance claim where it's a very large family, you might be very hard to find a 5-bedroom furnished rental, but they may be willing to take a few suites on the same floor, for example. So that's
great. That's great. No, that's great. So take me through some numbers. So when did you? Are you still in the middle of this, or have we're completed?
So we got the keys December 2018. And I'm happy to report we finally got to full occupancy just fairly recently. So it's been a bit of a tough, it was a downturn in the market, natural downturn 2019 out here. And then we had COVID just as thought we were coming out of that. So it hasn't been the easiest go. I imagine leasing them all, but are now full.
Okay, so what was the money in? What's the purchase on this?
So the purchase price on this is 20 million, round numbers.
Big deal.
It is, yes.
Okay.
The condo prices break down to like 300,000, 450 kind of range.
Yeah. And you bought how many of them?
46 and a commercial unit.
So 46 units plus commercial. Okay. So how much did we have to put down on that?
We tried to really simplify things, but it works out to about 15% down, which is $3 million.
Yeah, I mean, simple's better.
Yeah, it's we got in early, so we benefited from a lift in the values, but that's basically how it worked out.
Okay, and so where did we get this $3 million from? Different investors with you?
Correct. Yeah, there was one gentleman that represents an investor group, and then I also brought in a substantial investor. And then we partnered with the developer.
And what was the minimum investment amount on that?
There wasn't really a minimum on this one, but for example, the way that it worked out, my investor invested $2.5 million because the other investors were in much earlier. So they benefited from that, just basically the initial deposits and things. So, but to answer the minimum investment on a typical super suite joint venture, it could be as low as $75,000, which is 20% down on a $300,000 condo after closing costs and setup fees.
Okay, so our down payment was $3 million. Then what? We go to work, right? So there's money for renos.
Yeah, so it's new construction, right? So we don't have a lot of renovations, but we did add aging in place renovations for the IP suites. And we also had furniture setup costs. So combined, that worked out to about $650,000.
Furniture. So you're saying $650K? And did we include closing costs on this?
No, closing costs were about $500,000 round numbers.
500,000?
Yes, so 2.5%.
Okay, for closing. All right. Anything else?
Well, the total cash required was 4 million.
4 million and change, I guess. 4,150,000, but you use 4 million?
Yep, round.
Okay. So 4 million is what we are in for. Your own friend put in 2.5 million of that. The other 1.5 came from Rav and Friends type people, and minimum probably about $75,000. And so now, how do they get to enjoy their return? Break down the 3 or 4 ways that we make money on this.
Sure. So, and it's typical with super suites is that there are dividends. That's one of the big draws to the investment model is that we buy the farm for what it yields, not just for what it may be worth one day. So it's either going to be monthly or quarterly distributions, and we usually target like a 4% return as we go out of the net cash flow.
Okay, so I'm just going to say cash flow around the 4%. What does that equal out? 4% of what? 4% of the 20 million?
4% on the cash they have in.
On the cash that we're going to divide it all out. But so if Rav put in $100,000, I'm going to get 300 and change a month if I were to break it down.
Rule of thumb, yeah.
Yeah. Okay, so on this, what do we have a number?
So on this particular project, the annual cash flow is 350,000. So it's a little bit on the lower side, but that should improve over time as we long-term hold.
Okay, so cash flow 350K, and then obviously these guys are paying down my mortgage.
Correct, and that works out to 250K. Our original mortgage was 12 million on this deal.
Okay, that's pay down my mortgage. How much?
250 annual.
And how much was the mortgage amount, you said?
12.
You're not afraid of the big numbers, eh?
Whew, I was I'm not lying, I was a big day at the lawyers.
$12 million mortgage.
Yeah.
Wow. Okay, but we're paying down $250,000 each year. Correct. Okay, and then obviously this product is naturally going to increase, especially in BC, but what did you give yourself in terms of a percentage of just natural appreciation?
We use 3% as the Fraser Valley long-term average.
Okay.
So that works out to 720K a year based on the recent appraised value of 24 million.
Oh, really? So this is now 24 million after 1 year.
Well, it was actually a long hold, right? Like we got originally involved back in 2013, and there was delays in construction, and by the time completion finally rolled around, our original price had increased substantially.
So we're not going to include the lift, or are we?
No. Well, I'm basing the appreciation.
On the 24.
On the 24.
Yeah, but what I'm saying is I'm not going to take the 4 million divided out by the length you're in. That's just bonus.
Correct.
Okay, so is that it? These 3 numbers?
That's it. Yeah.
Okay, what do they add up to? 6, 13, 1.3 million or something? What is it?
Yeah, so the way that I did it was I looked at first the cash flow and the pay down divided by the original cash invested. So 600,000 divided by 4 million.
Yeah.
Is about a 15% return.
Yeah.
Profit plus pay down. And if we're lucky enough to see 3% appreciation, then we're in the 30s, 33% per year combined.
Yeah, so just do that with me. 600, so that's let's just call it 1.3. It's a little more. What's 1.3 million divided by 4 million? What do you got?
To grab a calculator myself.
Oh, you don't have one? Okay, but it's basically a third. So that's what you're saying. It's over 30. It's over 30.
I got it ready here. It was basically 15% without appreciation, rule of thumb, and then in the 30s if we do see it. And that's typically what we want our investors to be happy with. We tell them low teens.
Yeah.
And if we can do better, then that's great. But we want them to be happy with low teens as a consistent long-term.
Yeah, I mean, that's very modest of you, but obviously real estate goes up and down upwards. Not that we should ever bank on appreciation. That's speculating. If you know you're speculating, go ahead. But the meat and potatoes, in my opinion, is always the debt reduction. Obviously, it's income producing, so you have some cash flow. But yeah, so it's a return on investment, 30%. We're not including the $4 million lift. If you average that over the 4 years or whatever, it's another $1 million a year. So it's 2.3. So this number changes to closer to over 50%. In the first year, if I use if I divide it all out. And so if I were to invest in this, you're saying I can enjoy 50% of the 30% on an annualized basis. This is kind of what we're talking about.
Yeah, this particular deal was a three-way deal. So it was my company, the developer, and an investor group, three-way split. And then the difference with this one is that there actually is going to be salaries to the manager, whereas normally we're on 100% performance-based pay out of the net income. But that's the way that collectively everybody wanted to structure this one, because there is a concierge and different things
Love
like
it.
that.
And these are all project specific for you. It's not like you don't have a fund or anything. If I want to get in the next project, it might be a two-way split, three-way split, four-way split. Who knows? And so is that what you're saying? The project?
Every deal's negotiable, and it just depends what everybody brings to the table. You know, who's putting in what and who's doing what, and then we go from there.
Perfect. Derek, all your information's on the screen. If anybody wants to contact you, they can go that route. Thank you so much. Time has run out. Thank you so much for joining us today.
My pleasure. Thank you so much.
You're welcome. And thank you, viewers at home or those listening via podcast. Without you, we would not have a show. Make sure you tune in next week, same place, same time. Honey, I love you. I'll be home soon. Thanks for watching, everyone.